Your social media platforms. 20146 is your SMS line this morning. And before I introduce our panel, let's intro the biggest story that you are waking up to this morning. Now, a new survey shows that repeal of the loan rate cap has had no impact on the demand for credit. Now, the Commercial Bank's Credit Officer survey by the Central Bank of Kenya shows that 90% of the lenders polled reported no change, while only 10% reported an increased demand for credit. Now, the signing into law of the Finance Bill 2019 in November 2019 effectively repealed Section 33B of the Banking Act, which provided for the capping of interest rates at no more than 14 percentage points above the central bank rate. Now, the removal of the rate cap was expected to reopen the opportunity for micro, small, and medium enterprises and individuals to access credit affordably. Now, slightly over a year later, there seems to be minimal change in the appetite for credit under the new regime. The question that we're asking this morning is, why has the lending to the SME sector remained below double digits despite the government's push for credit in the sector to improve? And helping us understand this in the studio, we're joined by Akinyi E. Odongo. She is the Creative Director, Akinyi Odongo Kenya TM. We're also joined by Joanne Moniki, Financial Analyst, and Sid Shah, who is a lawyer. Fantastic. Akinyi, let me start with you. We celebrated it. We said that this is exactly what we needed. I mean, we were going to finally improve lending to the MSME sector. But since 2019, it has done nothing. I mean, why?
I mean, as a business owner and in the fashion industry, and I'm very aware that there are many businesses out there that are small businesses that are not able to maybe get funding from the banks.
Yes.
It's something that is not really understandable when you break it down to the people in business.
Yes.
That what do the banks want? Because when you go to apply, I mean, there's a lot of processes that you have to go through.
Yes.
A lot of history that you have to pass through, and sometimes as a first-time applicant, you haven't gotten money anywhere else, so it becomes quite difficult to get funding. So I want to believe there could be, I don't know what process can be used so that SMEs can be able to get funding from banks.
Yes.
Because they'd want to have your financial history. Have you borrowed before? And probably that's the first time that you're actually going to borrow from the bank. And as an entrepreneur, I mean, for me, it was quite a tedious process. When I started my business, I knocked almost several banks, but they were like, audited accounts for the last 3 years. I'm like, 3 years, I've just started, and it becomes quite difficult for startups.
Yes.
So I think we need to have these conversations with lending institutions and just see how are we able to work with the small businesses so that they're able to get funding to make the move to the next level.
Yes.
Especially now after the pandemic, and most businesses have been able to have closed, or people are starting, where do I go? Where do I start? Are there institutions that are out there to support the small businesses?
Yes.
Yeah. So
pretty much. All right, let's again talk about this with Joanne as well. Joanne, well, look at it from this perspective. We celebrated it and we said, well, this is what the economy needed. I mean, a lot of economic analysts said, well, the cap on interest rates, worst thing that this economy has ever seen. But wow, more than 2 years, almost 2 years down the line, nothing. We're still talking about single digit credit access in the SME sector. Are we shying away? Is that a decision that the banking industry made, that, well, the MSME sector is highly risky in terms of credit?
Well, first and foremost, I agree with the lady in the session that banks have they're risk averse in terms of lending to small, medium-sized enterprises. But maybe it's because in the last 2 years we've seen a decrease in economic activity
Yes.
and a surgence in non-performing loans. And so banks, of course, are very wary of lending money that they are not sure they will get back
Yes.
to them in the first place. And then remember that the increase in the cap meant that loans would be charged at a higher interest. That means that, of course, the loan will be more expensive for the SMEs, meaning that that will reduce on their profits, profit margin. So it means that anybody wanting to eat into your profit margin, you'll be wary of taking up a loan that will, of course, hit your profit margin. And also remember that, of course, there's been COVID in the last 1 year, just about the time when we're expecting that the economy would take a turnaround in 2020, then COVID happened. So it means that really many businesses closed and the chances of them borrowing, of course, were very slim. So all those factors put in place may not help the situation now. And therefore, we may not see much change or a difference in terms of SMEs taking up the loans because of course, the economic situation in the last 1 year and the fact that the loans will increase their cost of doing business and, of course, into the little profit they're trying to make and survive. So it's a tricky one for businesses and SMEs.
Yes.
So maybe looking in 2021, we could see an increase, probably a slight increase in uptake of the loans, depending on how the economy will look like, and if SMEs are willing now to increase their risk and put more money into their business and in an economy that's trying to take shape. So those are the reasons why there could be a minimal take up of the loan.
Yeah. Sure. Let me bring you in on this, and good morning, sir. I mean, we celebrated it, and if you look at why we're even actually talking about the repeal of the cap on interest rates, it was to increase lending to the MSME sector. That's exactly the baseline reason as why we fought that exact act. Fine. But it hasn't. From what you said this morning, why hasn't this happened?
For having me on the show once again. I mean, if you look at how credit lending works, credit risk is the single largest factor that affects the soundness of any financial institution and the financial system as a whole. This is because lending is the principal business that banks undertake. The law, the interest cap law previously had the effect of inhibiting access to SMEs and other small borrowers who banks deemed as risky. These were people who wouldn't fit in the 4% risk margin imposed by law. And if you look at how the interest rate cap worked, it didn't really curb or it didn't really promote any credit growth for SMEs and in the private sector. SMEs were reportedly denied loans worth about close to 300 billion shillings, or about 1 point something % of our GDP during that period. Credit extension to SMEs as a percentage of total bank loan fell to 15% in 2019 from about 25% before the cap was instituted.
Yes.
Removed the Finance Bill 2019, and by the time it was implemented, it was close to November. By then, 2020 came in. By the time 2020, we moved into 2020. By February, COVID-19 had started hitting the globe, and we started feeling the effects closer to March, April. And if you see how, one of the biggest ways to improve access to finance for SMEs is through credit reporting, and where there's an information asymmetry, whereby borrowers would know more about the financial situation and investment opportunities than a financial institution or a lender would know, then this leads to inefficiencies, and the lending market, as lenders have information to assess the risk represented by potential customers.
Yes.
So if you look at some of the measures government took which led to subdued economic growth over the 2020 period. And things like, suspension of listing, defaulting parties on the credit reference bureaus. This increased significantly the risk a bank would undertake prior to disbursing any credit facility to an SME. And on an overall, it's the projection of private sector credit growth, which has been growing at a lower pace. It's been cited as a reason of non-performing loans, low economic growth, and all this, I believe, is strongly as a result of the COVID-19 pandemic. And as if we are seeing things slowly. I'm pretty confident that this year, as Joanne said, we might see a slight increase in the lending to SME sector. Yes.
To the studio. I mean, I want to give me a bit of history on the way in which your access of credit has improved from when you started your business to where you are right now. This is general saying in the economy that, well, we're trying to improve or sort of create conditions that are better for our smaller businesses in the economy to access this credit. Is it a journey for you? And is it easier now for you to get credit from your bank than it was maybe when you started or 1 or 2 or 3 years ago?
Indeed, it's much easier now for me because I've been in the industry, in business for close to 20 years now.
Yes. Are they asking the same thing they used to ask you when you started? Because that's kind of the question.
No, they aren't. The questions being asked now are not the same.
Yes.
Because I've been banking for a long period of time. Yes. So now you have banking history.
Yes.
They're able to go through your banking the way the bank institutions can actually see how your business is operating by your banking. When we start businesses as SMEs sometimes, especially when you start as a sole proprietor, probably you take in all the money, eat it all, you don't know whether the business money, all money and all that, you don't separate it. But with time as you grow, then you realize that you're able to now separate business and yourself.
Yes.
And when you have a bank account with a bank that is for your business, and you're able to every banking all the money that you receive in the business, and then it creates that history for the bank.
Yes.
So they are able to later on see how has the business been growing. Do they bank? And sometimes there's a perception that you have to have 1 million shillings or 10 billion shillings, whatever, in your bank account. Sometimes I've got 0 in my account, but the bank can easily look at is it a behavior of the business of an individual, or do you bank your money?
Yes.
It doesn't mean it's the turnover. It's not what is in the account that actually the bank looks at. And I think when we discipline ourselves, what I would advise the small businesses as they start, they need to start from the word go, being disciplined. Banking, keeping the accounts, keeping the books of the account so that it's very easy to follow through, and this will be able to help you grow.
Yes.
And I sometimes when we keep bashing maybe the central bank and all that, personally I had a facility with my bank, and I had an office mortgage, and because of pandemic I wasn't able to pay. So again, there was the reprieve of go and talk to your bank. You can have a period of time, and I was able to go to the bank and negotiate with my banker and speak. And just the fact that they were able to listen to me and give me we changed the moratorium period. So that I could have a holiday, like a rest. There was no business going on. We are stuck.
Could you say that to some level of degree, it's because, well, they know your history. But somebody who's starting out, you're in the manufacturing sector, you could be in any other industry in the country, but you have your business model here, and you like to think that there's business here, and so the environment in the banking industry is that you can actually get that money. Is it possible for somebody starting out now, especially in your industry, to get right in, go get that money and start your business? Because that is bound to be the question.
It's very difficult.
Yes.
I mean, it's not an easy task to just start your business and then someone trusts you and gives you money immediately.
Yes.
And I think that's where now maybe the banking institutions need to look into, how do they work with startups?
Yes.
what if I don't have history? I've just started my business, maybe I have my business plan, I don't even know. Sometimes the business plans that we do doesn't become what it is. You know, there's that leeway. And some of the things that I think also, if you look at what the government was doing in terms of ease of doing business, is what are some of the, can we do a green, is it called a green place where you can do all these things together? And have like a tax holiday for about maybe 5 years or 10 years, whichever period of time, so that it helps an entrepreneur grow from start. It gives you a period of time. If you register a limited company right now, you're given a year before you start, you know, doing your returns and all that. But within a year, I'm still grappling. I don't even know what I'm doing. Is this business going to work? And then personally, I've like a typical Kenyan starting a business. I remember when I did my first limited company, I had no idea that I'm supposed to do my returns. so I had to pay a fine. But I'm like, you know, we just need to have this space. I think we need to have more conversations and more forums for startups and serious conversations, not assuming that everybody knows what they need to do. Indeed, ignorance, you cannot, if you're ignorant, you don't go for the information, but at least we need to start having the conversations. And small businesses need to know, from where do I want to go and how do I start? Don't be like me who money ya mboga na chakula iko pamoja and you learn. So I think with time, it changes. But if my younger me, when I started my business, I wish someone would tell me that, Akinyi, start it seriously as you start. Start recording your 10 shillings and banking it before you use it. Then that is creating history for the bank to be able to give you a facility.
Pretty much. All right, Joanne, let me cross to you as well on that, even as we wait to actually tackle aside this morning, because it's actually related this morning. Good. Now, Joanne, it's not just about telling banks you need to lend to the MSME sector. No, because banks are a business and these guys are going to look at it from a business perspective. What is the risk that I'm exposed to in the MSME sector in the country? Joanne, but you're saying that, well, things are going to get better in 2021. But why would they get better, Joanne? Because some of these businesses are the ones that have been affected heavily by the coronavirus pandemic, meaning that the risk level is way up there, and the banks are the ones that have got into moratoriums that we're talking about this morning, extending those payments period. Are we not saying that 2021 is going to be the year again? We're talking about the worst lending to the MSME sector as well.
Well, I'm being optimistic in this perspective, in terms of that if you walk into the streets today and roads, there's a significant increase in terms of traffic and people and just activity around town and, you know, the economic activity. So I'm looking at it in this perspective that there is an increase in economic activity. I mean, from last year, of course. And what we are seeing is not what we were seeing last year. So I want to believe that there's a change in economic level. And of course, people are fighting to survive. You know, Kenyans are very resilient. So we may not see a highly significant improvement, but we could see a small improvement in terms of from what you're seeing in this month in terms of economic activities. Kids have gone back to school, of course, and so it means, I mean, school has, you know, sort of been sorted out. Schools are running, you know, the economy, you know, is trying to get into a start. So I am being optimistic that things will not be as they were, of course, last year, but they may not change too significantly in terms of economic growth. But yeah, we will see a slight change. That's my perspective.
Optimism is good. Shah, do you share the same sentiment? But I would like to ask you this question from this perspective. Do we need some sort of regulatory response from the regulator saying that a certain amount of your loan book, therefore, needs to go to the MSME sector? Because we keep on talking about how we want to improve lending in the sector, but the numbers, Shah, are below double digits, and we need them to be way up there. Do we need to respond like that? Regulatory approach from the regulator?
Yeah, I share similar sentiments as Joanne. And let me tackle it first from the regulatory perspective.
Yes.
I disagree with that, Simba. I don't think the central bank can start having regulations in force directing a bank on how to, disburse a loan.
Yes.
As we've just discussed earlier, loans it's the principal business for a bank, and just the way the legal structure in any democratic nation would work is you're allowed to do business freely within the confines of the law. So you can't have a central bank directing some financial institution to have a certain percentage or a certain amount of the loan book directed towards SMEs.
Yes.
If anything, given the volatile nature and the risk, the high risk of an SME, we could end up in a worse situation in the event that SMEs do not perform and actually default on these loans. And if you look at the same CBK survey that we are talking about, it had mentioned that the highest non-performing loans came from personal or household sectors, this is where the large portion of SME businesses operate from, or
Yes.
Can be kind of So I disagree. I don't think there should be any regulatory response, that would actually direct a financial institution to give a certain percentage of their loan book values to SMEs.
Yes.
However, I do believe this year should be better. If the same report, the survey report of CBK indicates that at least 42% of the people surveyed indicated that the repeal had increased lending to SMEs since majority of it are onboarding risk-based pricing models,
Yes.
which had increased the financial institutions' appetite to lend to SMEs. And with the economy opening up again, I mean, the World Bank has projected Kenya's economy for 2021 to grow at a rate of, I think, 6-point-something%. Yeah, so if we have all these, we are moving into not an election year, but a year where there is high political activity with the referendum going on, and you know how Kenya's economic cycle has always worked.
Yes.
Prior to an election year, I mean, our economy does grow significantly, and that could be a reason because politicians coming out and giving out money to the public, and that this release of cash helps SMEs. And if you look at one of the other factors that has negatively impacted cash flows of SMEs in Kenya has been delayed payments in pending bills from supplies to governments.
Yes.
So we hope that the government can get back on track in at least reducing pending bills. This will increase in economic activity. Then I really feel in lending to.
Let me cut you there short. We take a short break here on Business AM because I just want you to come back and clear on that segment because it's actually attached to the next part of the conversation that we're having right now. But let me just intro that. Now, you do remember the Buy Kenya, Build Kenya initiative. Where is it? But now, the guys behind it are saying that if you are a local apparel maker, adjust your price so that you can actually bring in customers to come and support you as well. It's a good thing because we do have Akinyi E. Odongo, Creative Director, Akinyi Odongo Kenya TM, who's going to tell us, is that true? And where are they with that Buy Kenya, Build Kenya initiative once we come back here on a Business AM? Can we sell Kenyan fashion in mass? Is that where the conversation should be?
Yes.
Because if it's not mass, then we're going to talk about high prices as well.
Yes.
That's where the conflict starts. Yes. But from what you said in this morning, can we get there?
Yes,
because
we can. We can.
We
can get there. Let me give you an example. As Kenya Fashion Council, let me speak with that hat now.
Yes.
During the pandemic, there was a lot of you remember when the first thing came, you sneeze on your elbow.
Yes.
You don't wear masks. Masks were only for the people at the front line. But then there was this need, we just need to have masks in public places. When I sneeze or when I talk or you don't keep distance, I mean, we just needed to protect ourselves. And it took a lot of work, even for us as a council, to engage with government and be part of this conversation and say, can you allow us to do masks? And we went ahead even engaged with KEBS. There were no standards for the cloth masks.
Yes.
So standards were eventually developed. We were working closely with KEBS and Ministry of Industrialization. And guess what? Right now, everybody is having a mask, whether it's a cloth mask. And do you know how much employment it created? Just making the masks, the cloth masks. And doing the cloth masks, what we say it's possible. As a council, we were able to look for an order. We tried to reach out to corporates, can we do masks? And we tested. We got an order of 80,000 pieces of masks from Safaricom.
Yes.
And how did we do it? We said, can we be able to, this would be a good test for us to see if you'll be able to dress Kenyans. Can we do something collectively so that we are able to produce something that is uniform with the standards that are needed and we are able to give it to Kenyans? The masks were done in tailors from Kenyatta Market. There's Gabaron. We have Uhuru Market. We had different markets. Tailors were getting this. So what did we do? We bought fabric, which is locally produced from thicker cloth mills. You know, we ensured that everything was 100% Kenyans. Elastic we got from Oriental Elastics. We took the fabric for cutting in a factory, so that the masks were cut into. Then we distributed this already cut mask and already cut elastic to different tailors in different places. And guess what? We were able to deliver. It wasn't one person doing it. It was a number of people. It was a whole chain, a whole process. And by delivering that order, it was evident enough that we as the Kenya fashion industry, we can be able to dress Kenyan. And why were we doing that? We were doing this because we needed to test, is it possible? Then can we come up with specific designs for the public, to produce en masse? We are able to do the patterns, distribute the patterns to the designers or the tailors wherever they are. We could get fabrics from the local manufacturers at an affordable rate, and we create these styles that we know we can be sent to every part of this country. So it is possible. It is doable.
All right, I'll be coming back to you shortly as we clear that conversation. Joanne, let me bring you in on this, the Buy Kenya, Build Kenya initiative. And I'm sorry for taking so much time with her because she comes from inside. That's why I wanted to really ask her on that as well. Do you believe in this initiative? And do you think that we have the ability as a country to support our textile industry? And I want us to even look at other areas as well, manufacturing as well. Do we have that ability?
Absolutely. I agree with Akinyi 101%.
Yes.
Because remember, we have the export processing zones in Kenya.
Yes.
And most of course, are apparel zones under of course, the previous AGOA treaty. I think that the government should change some of the policies that they have put in place for the export processing zones to allow them a bigger quota to sell locally to Kenyans. That will ensure that more of what is going as export is then taken back to the local market, because we don't have the bigger the large scale manufacturers.
Yes.
in the local market, but we have them in the export processing zones. So if the government can review their policies and framework of operation to allow these people in the apparel industries to export to the local market a bigger quota, and of course review the taxes. That means that most of our clothes now will not go export, but in fact will find market locally. And of course now the uptake will be from Kenyans who of course I believe can afford to buy these clothes, which are not very expensive. So because of course the zones are subsidizing their electricity, their taxes, the VAT is controlled. If the government can look inward instead of looking outward,
Yes.
then we have the capacity in terms of the labor to do it. We have the machinery, the industries, and the people to wear the clothes. So we shouldn't be wearing second-hand clothes when we are processing or making clothes in Kenya.
Yes.
So the government needs to look at the policies and framework to operate, to allow the export internally in Kenya.
Yes.
And of course that will that in the labor that is in knowing that during the COVID period they were not able to, so many jobs were jobs came to a standstill.
Yes.
And so if that means that jobs can still be retained, and we can wear what we have manufactured here in Kenya at a cheaper price. I mean, cheaper than what it comes in from outside after it's exported. So for me, I think we have the capacity, we have the people, we have the machinery, we have the know-how. We just need to put policies and frameworks in place for us to go into mass production.
Yes. All right. Can you just clear for us this conversation in 45 seconds, if you may? Does it lie on us expanding our textile industry, and you feel that there's that will from the government?
I fully believe that there's a will from the government. And if you look at the government prioritizing the outline in the Kenya Industrial Transformation Program,
yes.
I mean, it's one of the top agendas. Even if you look at the Big Four agenda, we have the manufacturing and textile, okay. and fashion is part of that. And there's a number of things that we've been able to, engage with government and even to make sure that how do we make this work. So the environment is there. And that is also being led by His Excellency the President, who wears local. I mean, I think right now almost every day he's wearing those shirts from Rivertex, and just pushing that and saying, let's keep wearing what is local. And when I talked about perception initially, when we speak fashion, people's mind just go, it's high. Do you know fashion is to the lowest level in the village? There's a tailor in front of a shop somewhere in Kiambu making clothes, and they've got clients. That's fashion, and they could be charging 200 shillings, 400. So what are we saying? And when we started even pushing for Buy Kenya, Build Kenya and Fashion Fridays, and I think the circular was also passed to all government institutions, and Kenyans are being told every Friday wear something Kenyan. Every Friday, if it's not every day, but every Friday. And if that is pushed further, can you imagine even in Siaya County, that teacher going to teach in class will wear a shirt that has been done by that tailor seated in front of a shop somewhere. In Kajiado, if it's a policy and it has been pushed, so it's something that is going to grow.
Yes.
So we don't need to create more. How do we start with what we have? Just like Moses was saying, what do you have in your hand? What do we do with what we have? When you want to, I grew up in the village and I used the 3 stones. When you want the fire to burn, what do? You have to bend down and blow the fire from the bottom so that it burns, so that the food cooks.
Yes.
So we already have something in our hands. What are we doing as Kenyans? Are we supporting to the county level? If this thing can be pushed, even the governors will be able to push it on their county level. I mean, we are going to create just buying Kenya and building Kenya. And buying Kenya, building Kenya means if you travel for Christmas in the village and you're coming from Nairobi,
yes.
you don't need to buy an outfit from Akinyi to go to the village. Go to that mama in front of that shop and let her make for you a skirt, a
yes.
short, and pay that 200. So it's about perception. Are we looking at fashion as something that is just unreachable? No. And just what I think the previous guest was speaking when she was talking about the EPZs. where it's 80-20. They're actually allowed to sell 20% locally. But again, if you look in terms of policies, even for us, assume I want to go and be based at the EPZ.
Yes.
It means I have to export 80% of my production and only 20 locally. So probably as I get in, I still don't have the biggest 80%.
Yes.
So we are looking, can the government start allowing even the smaller businesses to have that, you know, if we can get in and maybe reverse it to 80, I mean, I don't know, it can work, but believe you me, Buy Kenya, Build Kenya is an initiative that we are pushing, and
Yes.
we don't need to look at it as something that is not reachable. It's reachable, it's available, you can support the local tailor wherever they are, because I believe even you must be having a tailor somewhere.
Of course I do. All right, I think we need to table this conversation separately because I don't think it'll end. But just give us 5 minutes so we can clear this conversation with Shah. What data from the National Treasury now indicates that foreign debt went up 22.1% from March to December 2020 to 686.47 billion shillings after Treasury ran to quick credit disbursement facilities to pull the economy out of the COVID-19 pit. Now, domestic debt, on the other hand, jumped 18.75% to 546.44 billion as the government also turned to local lenders to fill in the gap, a factor that saw domestic debt jump to 1 trillion shillings in a single year. Now, the government took to conditional loans, a factor that has been avoided before, with World Bank contributing, now wait for it, 970.21 billion shillings, representing a 21.75% rise from a year before, with International Monetary Fund (IMF) support jumping 190.33% or 115.33 billion from 39.73 billion in December. Shah, why are we going for the conditional loans which prior we have been running away from?
Thanks, Simba. And you're right. I mean, we've kept away from this type of credit facility, I think, since the last time we accessed such a facility was prior to President Mwai Kibaki's administration.
Yes.
And it's a type of credit facility which is a quick disbursing facility where money flows straight into the budget to top up the public purse. And such funds can be used at the discretion of the government. The issue with such type of conditional loans is the budget support funding is not tied to any specific project, and it can be used to even fund politically important activities like, for example, our BBI so-called referendum that we are to have in July. So yeah, it's been a while since we've accessed this type of credit, but I think Kenya's, the country's rapidly deteriorating cash flow situation that has been marked by falling revenues and worsening debt service obligations.
Yes.
It's one of the main reasons as to why we've had to tap into such a facility. Revenue collection has underperformed by close to, I think, 40 billion shillings in the first 2 months of the financial year, which is July and August. And tax collections in the 3 months to September, I think, dropped by close to 15%. And there have been a lot of funding constraints that have forced government to scale back on many of President Kenyatta's Big Four agenda projects. These are some of the reasons Kenya has had to tap into the IMF and World Bank facilities, the conditional loans.
All right, Joanne, also clear for us this conversation. Just 45 seconds, if you may. Are we at a catch-22, something that we should be going for, but now it looks as if we have to go for it? But I want to ask you about the ripple effect that we've seen so far. I mean, IMF has coerced us into accepting an additional 3.4 trillion into our debt portfolio, meaning that according to them, for us to continue getting this money from them, we have to be at 10.4 T right now in terms of our debt portfolio. Are those some of the facts? And are we at a position where you gotta do it whether you like it or not?
Well, I'll say that the government is between a rock and a hard place,
Yes.
just like I mentioned.
Yes.
That with, of course, projects that were in place, development projects that, they had a span this in terms of the period and of how the economy would now, how they would be able to pay back these loans. I mean, the government, of course, has been forced to go into this kind of loans to complete projects that they had planned to complete. And of course, with building revenue, that means that they have to continue with recurring debt within the country. So it's where you call yourself between a rock and a hard place. I mean, you have no other alternative but to, keep the economic activity running in terms of projects and cash flow into the system. At the same time, ensure that you are not in bad by asking for loan extensions and reprieves, and just making sure that you're in the good books of your lenders.
Yes.
So yeah, it's a rock and hard place. Yes.
Pretty much. I would like to say thank you very much to you, Seicha, for joining us this morning. Joanne Maneki and also Akinyi E. Odongo from Creative Director Akinyi Odongo Kenya TM. We need to have that conversation another time as well when we have time.
Yes.
We could say we didn't even scratch the surface of it.
Yeah.
Said Joanne Akinyi, again, thank you very much. This has been another edition for Business AM. Take them back to the time that they came to the studio at Metropole TVKE. Good morning.